Hi, my name is Phil Grande. Welcome to my YouTube channel and my third segment as to the unfolding of the stock market crash. Every Friday, I do a segment for you so we can guide you along to the actual crash so you are not going to be shocked. Also, you're going to be able to prepare yourself to learn how to sell stocks short. So when the market goes down, you're going to be making money instead of losing money. So let's bring you up to date since we last spoke. We're starting to see Treasury yields going up. Treasury yields are going up. And we're starting to see the dollar going up. That is bad news. That's telling us things are getting worse. The economy going forward is getting worse. Even though we had the big tech stocks go up this week, they're going up for the wrong reasons. They're going up over the excitement of the fact that they got rid of Trump and the big tech now have Biden. But you don't buy a big tech stock when you have treasury yields going up and you have interest rates going up, rather, and treasury yields going up, and you have the dollar going up because they can't sell their goods overseas. They can't compete. So we start seeing now another problem. High treasury yields, strong dollar. That means the economy is going to get much worse. Big warning. Also, what are we seeing? It was announced this week that they're going to do more stock buybacks. Remember what happened in 2008? Instead of letting the market go into a recession to help Main Street so that everybody reduces their debt, including the government, including big corporations, reduce their debt, including Main Street, so you come shooting out of that recession, helping Main Street increase 4 to 5%. They said, the hell with Main Street. We're not going to help them. We're going to get the stock market going up. We're going to get the market to go up. And the market's shot straight up. In fact, if you look at the stock market since 2008, okay, this market has gone up so much that 10% of the population, think about this, the top 10% their net worth increased 225% or 14 trillion. If you just take from January 2016 when Trump became president to when he left January of 2021, increase 5.4 trillion. That's a 60.8% gain. So the top 10% of the population are making all the money, and 80% of the population are getting nothing. They're getting nothing. What they are getting is debt. And this is why you see the economy is going down while the stock market's going up. Now, the problem that we're having, we also see now they are doing more stock buybacks. They announced this week more stock. They have to because they can't move the stock market up without stock buybacks. The big tech stocks, Netflix, the rest of them, all announcing, hey, we got to do more stock buybacks, which simply means print money, give to the big corporations, so the big corporations can shrink the amount of shares they have, so that when their lousy earnings comes in, the stock market their stock price goes up. Remember, the trick is shrink the amount of outstanding shares, your stock price goes up, and you don't have to worry about profits. The other problem we now are seeing too is we're seeing that the monetization of debt is getting worse. It's increasing. Yes. Remember, monetization of debt. Remember what QE is. QE is simple printing of money to keep interest rates low. And here you go. 1 trillion, 650 billion, 400 billion, 1 trillion. That was done right in this area here, right in 2008. Keep interest rates low. They keep doing that. They keep keeping interest rates low. That's called quantitative easing. The other portion is monetization of debt, where they say to these corporations, okay, you're in such bad shape, don't go into bankruptcy. We're going to buy all of your bad debt, put it on our balance sheet. From 1915 to 2000, they only put $500 billion on in 85 years. 2008, they put $700 billion on in 8 years. Look what's going on now. 2008 to 2020, $7 trillion. They've taken $7 trillion of corporate debt to keep them alive, shifted over to their balance sheet where it's $7 trillion. What does that mean? That means the economy, these companies, 33% of the S&P 500 companies should be in a bankruptcy, but they're not. They're being kept alive. And they're increasing that as well as increasing the stock buybacks. The phase we are finding ourselves in now, and the evidence is that the economy is getting worse, is because the treasury yields are going up, and so is the dollar. We are now at a very crucial point. Think of this. We're at a crucial point. The national debt at the same time is rising 36% faster than the economy. Household debt is rising 60% faster than the economy. Corporate debt is rising 40% faster than the economy. Auto loans, credit cards, student loans, debt growing 30% faster than the economy, but 38% faster than wages. So the top 10% is capturing all the goodies, all the money, but the rest of the economy is getting deeper and deeper in debt because of the zero interest rates. They can go use their credit cards and buy stuff, and they think things are just lovely. Things are great. They're told that by the fake business news network. The fake business news network also keeps telling people that the stock market is the economy. Look how well we're doing. The economy's doing great. Look at the stock market. The stock market isn't the economy. The economy keeps dropping. The economy's getting worse. Always keep your eye on the treasury yields. As the treasury yields go up, it never lies. The bond yields never lie. When they start going up, it's telling you, looking out in the future, we're going to have a problem. And that's what we have seen since the last time I reported, that things are getting worse, and the proof is treasury yields are going up. Things are getting worse. They're increasing their stock buybacks. So stay tuned every Friday, and please make sure, would you please do me a favor and make sure that you hit subscribe, and you also hit share, and you hit like. And please remember my show, okay? Go to my YouTube channel, and you can hear me every day from 3 Eastern to 4 Eastern. I'll see you next Friday with an update. We're getting closer and closer to that final crash.